Hello guys, welcome to Nifty Alpha Trader. Phew. So today I am going to discuss on mostly what's going to happen. So predicting the market sectors and other things, whatever are the changes which are happening. This was a volatile week. The entire week it was Nifty has gone up and come down. So everything which has made like since January is almost it's like market is right now at zero. So whoever has invested in January might have in Nifty Bs would have been in the same range now. So let's discuss overall how the market is and how the trends are looking, not just from the technical aspect, also from the market aspect, and how the global markets are doing, and just see the overall action so we can take better decisions out of the real trades. So going forward, let's start it. So coming to the disclaimer, I am not a SEBI registered investor or a trader, so be careful with all the frauds and fraud gurus. Basically, even I am not a guru, I am just doing my homework on my trades and my investments. This is no it might be educational for some people, but don't take this as a formal education. This is just what I have learned through years of experience. But my things, if I say technical or fundamental, there are a lot of videos which you can refer. I might not be a correct guru. This is entirely my homework and my research for my own analysis on how I have predicted the market over years. So that's why I've started this vlog. That's the main core purpose of it. So let's get started, and let me share my screen now. Okay, so first, when you are looking into the screen, let's start how I analyze the market. So I'm going to my Tijori. I don't know why they have not still didn't give a black theme. So but if you're seeing this at night, it's like almost dead, and no one wants to see my picture, especially at night. So I'll only take display, and I'm only going to display the display. Now coming to the markets, Tijori is really good in terms of the stats which it's giving, but now it is not loading. But overall, if you see, everything is down this week. The overall week is down. The month is positive, but the weeks are really not doing so well. In terms of hedging and what portfolio hedging we have to do, I don't think nothing is too serious, and overall we don't have to hedge our positions, or I think we are in a safe place right now. We are not so much terrible that we have to hedge right away. But overall, let's see one by one. Entire Nifty is down by -2%, and this week, even though it is a positive of 7% the entire month. And then next would be let's go by IT sector first, because IT has given a big boom. So overall, if you're seeing the product based and platform based companies, like InfoEdge was down, terribly down, like overall month wise. Even if you're seeing 3 months wise and 6 months wise, it's down, and even 1 year wise also it is down. So overall, InfoEdge, Naukri, which I was recommending in my previous video, that's why I was saying I might be a fake guru. So if I am trying to teach you, don't learn from me, because I have picked the stock once this has dipped, but fundamentally I like the stock. But since it is dipping and it has dipped overall for past 1 year, this is looks like an interesting investment. But ultimately, if you're seeing how much it has gained over years, 42% over yearly, and this is a good returns. Overall weightage of InfoEdge is lesser, but the overall which has tanked, which were the losers, in weekly basis, if you're seeing, there are two straight losers. One is in India Mart, which is a startup, and InfoEdge, which has a startup in their portfolio, and matrimony.com, it is also down. And if you're seeing Route Mobiles, I don't know what Route Mobiles is, let me see that once. So this is just coming to platforms and products. Even Paytm was down, I don't think they have added it here, it might come somewhere, let's see that later. But ultimately, if you see, Route is a cellular network, and even it's down. But let's not concentrate on this, let's concentrate on large caps. HCL is down, it has grown a lot over years, it has grown 20%. Okay, it is down by 11%, 12%, everything is down by overall 4%. But what is a savior and what is standing? If you're seeing Tech Mahindra is also down. If you see Infosys was down, but not as reddish as this. Today it was down by 2%. But overall, if you're seeing, mostly Wipro, L&T, Infotech has dragged the market yesterday. Even today it is down. If you see TCS, even TCS is less compared to this. But overall, if you're seeing reds here, I am seeing mostly reds in InfoEdge. Again, InfoEdge is also here and here, both large caps. It was down again. If we are going to Infosys, what is down here? L&T Tech was greatly down, and it has almost 3 months. It has touched 3 months low. And even Wipro has is almost going for 6 months low. It is touching the 6 months point there. And if I'm seeing mid caps again here, mid caps are also down. If you are looking at mid caps, Mindtree especially was terrible. It has grown a lot. If you're seeing, I also had few trades in Mindtree, but immediately I had made few losses here. But yeah, overall this is doing sad. But Tata Elxsi has beaten over years. It has grown a lot. In last 5 years, it has almost given a returns of 56.6% overall. This is the entire CAGR combined, I guess. Yes. So this is how it looks overall, reddish. Apart from Tata Elxsi, if you're seeing, and Just Dial, everything is in red. Just Dial is in monthly 6 months red, so it is reddish. Only Tata Elxsi, which is a product based company and mostly auto based products, so it is only Tata Elxsi is doing well. Apart from that, nothing is doing well. In small cap there are so many, but what do we have to care about is whichever is doing the largest. HCL Tech Infosystems. HCL Tech is different from HCL Infosystems, and Cyient is also a big company. It's not a small company, but even it's doing terrible. Everything has gone down. If you're seeing for 6 months ranges, almost most of the things are going to touch 6 months. Some are even touching 1 year reds. So IT is completely down. Why I picked IT first rather than Reliance or banking is because our country exports is mostly on IT. So if these are down for yearly basis, I am thinking the remaining sectors also can be bearish like the same. And now coming to utilities, not utilities, let's go to next, let's go to banking. I don't think banking is here right now. Let's see banking as a separate thing overall, but it has to be here. Utilities. NBFCs. Yeah, it has NBFCs, but not banking. Great. NBFCs, banks. Yeah. banks overall. Let's see banks. So banks, if you are seeing most of the banks, the main bank in Bank of India is completely in red. If you're seeing even banks are closing almost in red, it has almost all the banks apart from, if you see HDFC is in green in 6 months. But ultimately, if you're seeing, most of them are going back to the original prices. There is correction overall in the entire market. That is what we can keenly see. But whichever are good are going up overall. If you are looking at the ICICI Bank, it is doing well. If you are looking only this time, it was low, but overall monthly it has grown up. And if let's see HDFC Bank, HDFC Bank is also doing good, but it is in 3 months range. And if you're seeing yearly range is also touched, but from 6 months it has been growing again. It's beating 3 months, so almost in a mixed view of HDFC Bank. If you are seeing, let's see SBI is doing really well. Even today, if you are seeing it, even though entire Nifty was dragging it, it is not going in such a fast pace in a bearish move. It slowed down the moves. Because of PSU banks today, we were somewhat slow, in a slow momentum rather than going aggressively fast. Okay, let's see on the top level, if you're seeing, right. So which sectors are correcting the most is what we have to care about. And will there be a chance of entering into that sector again? Is one sector which I find really interesting is Pharma Sector. I don't know whether Pharma is here. Yes, Pharma is here. If you're seeing, all have corrected 6 months, over 6 months, and they are in a good correction. So if you're seeing Pharma, API and CRAMS, they are also correcting to 6 months. And if you're seeing packaging and containers, even they are correcting to 1 year. So wherever the corrections are rapidly happening, like asset management systems, if you're seeing, there might be Reliance that is dragging this entire thing down. But overall, let's see what all have a serious corrections. The serious corrections are happening in asset management overall, yearly, 3 years wise. And if you're seeing this, and then this is not a correction anymore, because it's 3 years down, it is a crash. So when we are entering, we have to be careful about this sector, because of the entire sector got crashed here. If you're seeing even the private banks, if you're seeing here, because of Yes Bank, the entire private bank was affected only just because of Yes Bank, I guess. See this, Yes Bank is down, yearly down. And if you're seeing 5 years, in a 5 years trend, if you're seeing South India Bank, even that was down. Even RBL Bank recently, it has tanked a huge down move, and then again it is in minus 16% overall. Only bank which is really doing well is ICICI right now, and it didn't have a good correction. We have to wait for that correction to happen, and then we can enter again by seeing just this graph. Let's see HDFC, it's having correction. If you're seeing, because overall in 5 years it was good, HDFC, so it might be doing well. If you see Axis Bank is somewhat doing the same, it has some correction, but HDFC has a better corrections in 1 year chart than Axis Banks. So this just watch out for HDFC Bank. And even when I'm seeing Kotak Mahindra, even that's fine. But overall, if you're seeing the banking segment, private banks were down completely, and now they're picking up in a slow pace. Apart from Yes Bank, everything else is in a good shape, I guess. Then coming to the next sector, which looks interesting overall. FMCG sector, recently there was good news around FMCG sector, or let's say for this one, what is it? Jubilant Foodworks. They are launching Popeyes in India. That is a good news overall. So it can be doing better. But if you're seeing overall trends, what has been doing early in 5 years chart, let's see what is good and which has a good correction. In a 5 years chart, if you are seeing the corrections here, so future commerce, you have to stay away from that because it can lead to something again like yes bank situation. You have to be away from Manaspan. So basically what stock exchange is, according to me, is you have to stay away from loss making companies and you have to only stick to profitable companies over a long term, and then you'll basically not make 10x out of your trade, but ultimately you can, at least the risk reward is safer on the good companies if they are growing overall. If you are seeing this one, for example, ABF Foods, I don't even know what they are doing seriously. ABF Foods, I'm just seeing, let's see the knowledge base. Native spices, chutneys, pump-placed foreign snacks, so olive oil, pasta, PG Organics, Aeroplane Premium Pickles, and okay, so they export pickles, almost native products, and the ratios here are here, and ROC is good overall. It is good, better than Tasty Bites or Pratap Snacks and other things which they are comparing to. So overall it is good, but I don't really know what products they are making and other things, so I'll have to go in depth, but I've just picked one out of all these. If you're seeing just this, 5 years it is good. In 3 years also it has moved a lot. In 2 years it has moved much better. Now there is a correction for 6 months, but overall it was doing good. Let's see the chart of this one now. This will be in white. Okay, I have a dark mode. I guess I have a dark mode. Dark theme on, yes. Yeah, we are presently on a dark theme, and now okay, I'm seeing a wrong one. Let me go to, what's that called, ADF Foods. So it has moved, it has spiked since the COVID crash. Since then it has moved with an extreme good move, and it is consolidating here. It has a bearish trend. I don't know the sales and I don't know the financials here, but P ratios are somewhat aggressive for a small company, seeing it's a mostly pickle company, I think. So overall I'm just looking at the top levels, and let's concentrate on the main thing, that is sectoral. So FMCG overall, okay, I'll go a sector first, which to pick. This looks interesting. What is this? Holding companies. Okay, Equitas Holdings and others. This looks interesting, but the correction is not so good. I'm looking for some company where the correction is there, yet the move is good. Something like rating agencies. The correction is also good, as well as the move was also there. So 1 year move was aggressive. So CRISIL was really good. Now if you're seeing, since 6 months it is down by -2%. So there might be an entry, but we have to be careful in CRISIL entry. Now I will mark this as one thing to look for, that is CRISIL. I will add this picture. Then okay, overall if you're seeing agrochemicals also, when they are doing it, there is some correction of -3%. If you are seeing polymers is still aggressive and going up in 6 months. So I'm only seeing the investment perspective here, nothing else. Agrochemicals wise, even there should be a correction somewhere in other things. I'm taking CRISIL here because the overall correction is fine for 6 months, but the growth was around 53%, so I might not enter. I would see further correction, but overall 5 years, I guess this is a CAGR, which okay, annualized returns shown are annualized. Okay, so every year they are making so and so. Okay, cool. Next one is PI Industries. Looks really good in terms of that. Annualized returns was 63.3%, and right now it is looking like a good one. Already I was thinking about PI Industries, but was not aggressive. Now it looks somewhat interesting than other things. If you are looking at here, I'll just this one. Okay, PI Industries in agrochemicals, and if these are not heavily corrected, only agrochemicals I'm seeing, especially in agrochemicals also, the overall annualized is this one is fine. 3 years annualized is this one. PI Industries are again good, but overall this Punjab Chemical is doing great. Okay, let's go to Tata Chemicals. Tata Chemicals annualized is I might prefer only PI right now. Let's go to Alkylano specialty chemicals. So I am not extremely into specialty chemicals, that is why I don't enter. I don't understand specialty chemicals. SOIC clearly understands chemicals, that is good, but I was bad at chemistry and I don't understand chemistry, so I might not at all go into that sector. Now if you're seeing this, I already am heavily invested in Aster DM. So, and even the 3 years growth, if you're seeing, it's just 5%, but overall the fundamentals are good. I'm just so this doesn't, if I was picking like this again doesn't come into that category. What I would pick is, because hospitals are doing overall 16% and diagnostic chains are doing it 31%, I would again pick something like Apollo Hospital, but Apollo Hospital is already doing good and the valuations are great, so that I can't enter right now. It is not undervalued. Now if we are seeing Apollo Hospitals, again it's great with a good record. Aster DM is down. Fortress is looking good, but Hospitals Narayana is also, the CAGR which it's giving is fine, but if you're seeing, this is giving extremely low, that is 5.7, but overall it is green and this is less, so this is a good pick for me, that not just because of that reason, but overall if you're seeing, okay, ultimately if you're seeing this, it's always going to be Indigo. Now coming to logistics overall has moved because India is aggressive on logistics. This might even go much better and do much healthy than previous records. So what are the companies? I would say, Adani Port is down and the correction is also good, if you're seeing, and whatever it has tanked over years is 21%, which is great. So let me take a picture of this, and so what did I find here is Adani Ports ka overall is good. This one is also good. And even this one, really interesting. What is this? CMEC. Okay. If you see, this is giving these result in 1 year period of time. Okay, I'll delete this. I'll click with years and dates. Overall sector, and next is Adani. Next is this one. This, whatever is in green, we'll pick that first. This is extremely green. Overall 5 years it has given, last in 3 years itself. Last 6 months it has grown a lot. So even if we don't know about the stock, we should show some interest, because if it might be highly given high valuations, but still we have to look into it. The next one is here. This is an interesting story again, which this might be small cap or whatever, but ultimately they have tanked so much in growth. It might not be a pump and dump, most probably, because, or it can be, but over a period of some years, I don't think they can sustain for such a long time being a pump and dump. So if you're seeing this, and this seems new, but overall in 3 years it is doing good. And in these the list which you have ticked, what has corrected over time, that is the thing which we have to pick right now. So if you're seeing there was no correction in any of these things. Even here there is no correction, even here there is no correction. If in here there is good correction, Container Corp, overall correction. But if you're seeing this is the lowest among all these apart from this one. And even the overall industry, there is also some correction here in Adani Ports. So these are the 3 things. The major correction happened here, and nowhere else there is a major correction, even here. So Container Corp and Adani are the major players where the corrections have happened. So we can pick this again and go further with these. That is what my thought process is. So one is logistics, which I am going to play on. If they are in F&O stocks, we can go with futures. That is it here from logistics business. And FMCG also, there is a good correction overall. Oh wow. So but there are so many stocks in FMCG, so I have to zoom out and pick carefully. In FMCG there are so many stocks. So first let's circle off what all performed really well. So whichever is positive is fine, whichever is negative already we will will remove them. And let's just pick 2 stocks out of these. Okay, not pick 100 stocks, but only 2 stocks. Okay, whatever is in extreme green, we'll go with that. Again, we'll circle whatever was extreme green. So this was good. This is again good. This was great. This is great. So if you're seeing, we picked 3 stocks. I didn't even see. One is ABF. This one is Nestle always. And this one is Relaxo Footwear. And then there is Tata Consumer Products. I already hold Tata Consumer Products. And was there a good correction for 1 year? No, but there was a good correction for this time period. And let's not just circle these now, and also go for other circling the next category, but let's change the color of these to orange or something like that. or another colors which we can pick. Okay, now circling the next ones, which is okay, this is good, this is good, this is also good, this is great, this is good, this is not good, this is not good. So we will whatever was good, this we found really interesting. Hudson is basically a Chennai based milk production, and as well as they own Ibaco, so they are pretty famous. But so far there has to be a correction. 12% minus correction is good, but overall if you're seeing, this is better than what we have marked here, so this is good. And even if you're seeing, this is 29%, so I should have marked this one extra. And then if you're seeing, this one is extremely good in terms of that. So we'll do a study on these things. But apart from that, have I missed anything which is really important? And what are all in a good trend is this one. Tata Consumer Products is coming to a good trend, and this one is not. Whichever is a good stock, they usually don't come in this zone. So if you're seeing in 1 year downtrend, they can't move to 1 year minus downtrend than whatever they were in the previous ranges. If you're seeing, this one looks a little weaker, but this mark is not correct, so I will erase that. I might not give this category. And this is good, so we will okay, cool, sorry, this has to be given this mark because it is 40. I should delete this ones. Britannia is good, 18%. First let's mark all which are below 20. These are all below 20, so I can delete this. These are above 20, so let's have this. This is below 20, so I'm marking this with the above, all are below 15. I will delete this one, above 15 is, this one is hot, this one is deleted, and I will just point this below 10. Let's not care about below 10 because bank gives a much better interest rate than below 10. So if a company is growing below 10, not banks of course, I mean we can make better profits than 10%, so I'm avoiding them. This is good, and this is good. So overall, if you're seeing, we have marked the right ones. These can be deleted, but let's keep them. Overall, they are doing good. So which was corrected? This correction has happened. What is company? Hindustan Unilever. Okay. Now we have to find out what they are doing bad over this year and concentrate on this. So this is the main key. A company which is doing bad since not since a year, but if you're seeing overall, it was down by a lot, but there's no pickup. Overall trend is bearish, so we have to read a report on this because I would give that. The good thing about MAC is the star mark. And now there is one no other valuation which was close to this. And even this is in a correction, but this is not major correction. Even this is not even this has some correction, so we have to star Britannia India, where okay, Britannia India is also doing somewhat in negative. Even this one, Dabur, okay, this has a capability, Britannia India. Let's see, Britannia has grown a lot over years, so this 5-year chart can be along more than that, but overall it was doing good. So 2 years, 3 years it is not growing. Where is ITC? ITC is in -2%. Okay, so that's why I'm not I'm filtering this out and removing ITC. If you see, there is this LT Foods also, we have to mark something important, because if you're seeing this chart, this looks interesting, but this has been consistent grower, so we have to even focus on this one, Tata Coffee. So this can be upcoming stars, right? So we have to look at 1 year performance जो भी अच्छा किया है, even that are basically means that they are looking good for us. So I am marking this just to think कि ये बहुत अच्छा कर रहा है अभी. Oh my, I am shitty with stars. Okay, there's one more star, and even here this has overall been a good one. Okay, and lastly this one. So Relaxo footwear, I am giving it 3 stars, because overall performance in long term as well as 1 year chart, it has been good, and 48% is a good overall performance. But is it over, or what will it be doing? We have to read a report on this one. Okay, cool. I can't keep correcting this. Yes, this is good. Cool. So FMCG mein we found a lot of stars here. So next, FMCG is done, where we can study on few companies. Next is media, has been in a downtrend and is at 4% right now. If you see, textile is going really up over years, so everything is green, so there is no correction, which we can't get into this one, but this might be a good trend which we can flow, but I am not an investor who goes like this. Okay, NBFCs. Now NBFCs overall is doing better. Let's say, okay, let me pick all the sectors which are firstly doing good here in 5 years chart, because let's just pick 1 year का जो भी अच्छा कर रहा है. 1 year everything good well, so it's very hard to pick 1 year charts. In 3 years, let's pick 3 years, not 5 years, 3 years में. If you're seeing, sugars have done a lot better because of this. Just 1 year it has turned everything around, so sugars is doing well, but nothing is in red here. 29.8. even this one, if you are seeing, this is everything is green. 3 years mein this sector, what is this, holding companies, they are also doing better. Life insurance is also doing better. So I'm seeing this one which is good, and this one which is bad. We have already found agrochemical mein PI industry, which is doing better in terms of 3 years and 2 years, and bad in terms of this quarter. So PI industry can be a pick there. And next one is okay, this one is interesting. Packaging film industries. Okay, Cosmo Films. Good, but I don't understand this industry, sorry. But even this looks interesting. Overall CAGR is extremely good. I don't know where they use these products apart from movie industries. They might be using this in multiple areas, but I don't know. Packaging and containers. This looks good, packaging and containers. Packaging and containers में what was good here? So let's see 3 years and 5 years में picks what are there. First let's pick 5 years. What are all heroes here? 5 years में heroes है ये और ये भी और ये भी. So if you're seeing everything is about 20%, so we have picked all these. Now in these, whatever are going up in 3 years, what were good in 5 years terms? So if you're seeing 5 years में this was good, this was not so good, this was good but not so good, this was good. Overall एक ही company है which is doing good, and that is Kariakan, and it is also here. So packaging and containers, this is doing good. But what I have invested personally is this one, EPL, and it is not doing so better than Belcare. Now let's see 5 years में apart from this what else is doing good. So EPL में there is huge correction. See, if you are seeing this correction is what is attracting. Even if you are seeing it was growing in 5 years in 8.8. This one is amazing, right? How did we miss this? All time stars. Everywhere there should be a star. Wow. I have to practice how to draw stars in using my mouse. Even this sounds good. Okay, that's overall industry. So we are going through a huge data stuff, which is not so great. If you are seeing this one, so where there were corrections, in this one there is no correction, in this one there is a correction, good correction, but it has already grown a lot, so this can't be used properly. Even this one there is no correction, even here there is no correction in overall this sector. But always remember this, all packaging industries might be monopolies in some space, so you have to not just go by this. Also see, sometimes these companies which were doing bad can be have a great moat and at something and cover off everything in just 1 year. So if you see this one, if you're seeing last 5 years it was not doing good. Now if you're seeing 150, it is hitting sixers after sixers. So it has to be something like this also. So you shouldn't just be caring about 5 years में क्या हो रहा है, 3 years में क्या हो रहा है. This doesn't matter. You're seeing even this ones, see, they are heroes here, right? Even if you're seeing this, see, every packaging industry overall was doing really well in past 1 year. So everything was hitting 100% return. So this looks really interesting. Everest तो पूरा जा रहा है एवरेस्ट की तरह. Done. Saved this off. Now I can't enter until I read the complete industry. Overall packaging industry is doing well. Pharma industry has a greatest correction so far, and if you, this is the segment which we should show real interest. But see how many companies we have in pharma, and to select within these things it is extremely hard. And what I have picked and what I'm suffering with is Lupin. Where is this? Yeah, Lupin is, see this, I have picked minus 8% here. It has not grown, but what gives me a view on this? Okay, the second one is Granules, which I've picked. I am seeing my investments, I have not used this strategy so far, but Granule was doing better and there was a huge correction. This correction is what we are taking it. So Granules is fine. Then what else do we have? I don't remember anything apart from this. So let's see Granules method mein. If you're seeing here Granules, this has a huge corrections in 1 year also, and the overall growth was really good. So if we have, I am looking for something like Granules more, and not for something like Lupins in pharma. And they should be in overall management and everything also, we have to take care of that and look into that. So what apart from why I have picked Lupin instead of anything else is the management, whatever they have said, right, in the past 1 year, they have kept on doing it so far. So I have been waiting for 1 year on not most of the farmers, for example this one Lupin. So it has to give a lot of returns because the company has been growing in US generic medicines and everything else. So, and apart from there is Loris Labs, which has been corrected. And if you're seeing Jubilant Pharma, they have reduced. Everything is in good shape, but it is hard industry to decode, so I might not do it right now. But overall there is a good correction and it is really hard to do this. If you're seeing API, so again API is also, if you're seeing this one particularly Aarti drugs, it has corrected almost over 1 year का पूरा correction आ गया है. So I will take this once again. Pharma में also APIs CRAMS में. CRAMS is really good thing for India, how these businesses are really great. So let's pick in these ones, let's pick only those who have performed in last 2 years, because these companies are the ones who have been really good at picking up with the pace and the trend, right? So let's there are 80s here. So first let's pick the 80s, which are here 80% growth, 80% and 86% here. And now we have picked 80%. Now let's go and see what all have a good correction. This one has a good correction. You see, this is not correcting, but even I'll mark this because it has a huge growth. Now there is a correction. If you're seeing this, even this has a huge growth and there is a good correction here. But this correction is great, but now this 80% are done. Let's see which of these have a better year on year. 5 years mein this is great, 3 years mein also this is great. This is also about 20%, so I'll put this. This is above 40%, I'll pick this. These are not above 40, this is above 40, I'll pick this. But this is not great. So overall trend mein I'm seeing Aarti. Is it Aarti which is doing good? Aarti, right? Yes, Aarti was doing great over 5 years. 5 years, 2 years, 3 years mein, but only 1 year this was the issue. So I guess we can pick Aarti again and ride with the trend. Now the other one was, what was the other one? Heikel doesn't have a good correction. Overall the growth was really good, so I'll keep even this one as a mark, because overall CAGRs, if you are seeing, this one is good and even this one is good. And what was this? We will wait even for this one, and There are multiple other things, Gland Pharma, everything, which are really good, but I am not picking those. I'm just picking 1, 2, and 3 without even knowing what they do, and after that we will go into them and watch them later. Done. So after pharma, small caps, there are n number of small caps. So let's not go into small caps now. So if you're seeing, what I am observing here is there is correction, but there is still growth potential in these segments. And now whenever we are seeing reds here, we don't have to be afraid. So when you are saying buy at lows, this is what it means. You have to buy at these lows which are already happening, and it is giving you a great buying opportunity which you have to pick. That's what I am looking for. So because the market was down, I am looking for a good stock to pick and capture it and learn the moves, and then do a homework on all these, and then pick a great stock among those, because ultimately the capital has to be doubled or tripled in a short span. There are a lot of spammers on YouTube. There are a lot of spammers on YouTube. I have to report everyone. Then after pharma, there is metal pipes. Even metal pipes may, if you're seeing, there is a good correction which is happening. Even 20, this one, if you're seeing 22%, which one is this? This is Ratmani Metals. The okay, 8,000 crores. It is doing good. Windmills के लिए supply करते हैं, and steel tubes and pipes. But this is extremely rich. This is good. Rest India. Okay, even they have presence all over the world. So this is fine. Okay, I am not going to go into metal pipes right now. Even plastic pipes I can go, but they're already in a good shape almost. So astral pipes से ज़्यादा cement right now, and then pipes after cement. So if you're looking at cements have so there can be a lot of infra projects which will grow. So overall there are a lot of cements. So the correction is happening over 6 months. So it's a good time to pick good stocks and grow on top of that. But I am presently invested in JK Lakshmi Cements, which is I don't know which levels, but it is good. And glass products. Overall, if you are seeing, this correction is really small correction which has happened only to few segments, not everything. So only 3 months ka correction hai, both every segment, and this can happen to all these segments which are there in agro and everything. So they might have a 3 months corrections. That is what I am predicting. So 6 months ka corrections are not what I am expecting, but 3 months corrections, they have to go back to 3 months correction price. Not everything, whichever is performing really well, they have to. So this is basically what I'm seeing is most of the stocks which were there are correcting, and whichever are really good, they will maintain these positions. So यहाँ पर utilities, city gas, telecom में there are Reliance Industries. See, if you're seeing Reliance Industries, it is not correcting. So this corrections, if they are really doing good, if the product and demand and supply within the consumer level is really good, they have to basically be stable and keep growing. But if they are imbalanced, and see, everything can't grow. If 3 months mein, if Vodafone is growing, as well as see Reliance is 3 months corrections is already there. But if you're seeing Bharti Airtel, if 6 months mein it has grown a lot, and now there's 3 months correction is 1%. So I'm expecting the corrections to be huge, and this has to be in minus, like Reliance Industries and other things. Even Vodafone right now, after a long time, it has picked up. So I don't think there should be an immediate correction, but overall I'm just saying in perspective of real business, it might not be doing well, but overall, how can all these be in my 3.3% when it has already touched a good level of, and there should be a consolidation, and this should be almost like in a good position, because last 2 years we were doing really good, 33% and 4% for last 2 years, and then 10%. So even though telecom is aggressively growing, it should take a consolidation level here and then grow. So that is what is happening. So this consolidation might be for a long phase, let's say like 3 months, over 3 to 4 months, and then it might not be a great drag, but there we can observe a great bearish trend for next 3 months, because DIs will start selling and FIs are already selling. They're exiting their positions. If DIs sell, there will be a huge bearish move, but that might happen after February, not immediate moves. So this is the things what I've observed from basic chart. I have to cover a lot of things, but if you're seeing these are all in a good corrections. Hospitality has to correct, and they are correcting. If you're seeing the last innerwear manufacturing, the people need kapda, so this industry has to grow. So it will be a necessity right now, and this will be the trend even in summer. In summer, this will even grow, and then it will reduce. So overall, the industry are consolidating to 3-month averages. That is really good, healthy correction which we needed so far, and we had that correction like since last 6 months. We are having a good correction. If you're seeing Nifty 13% growth is not a good correction after 18% growth. If you're seeing last 6 months 13%, overall 5 years में 16.5%. So we should find something which consolidates and gets lower to 16 odds or something. So if the GDP is not growing, everything is not growing, this should move steadily at 16 or 17 or 20%. But if it's growing in last 2 months, it has consolidated. Let it consolidate and wait for some time, find a good stock, and then we can continue. So far so good. So overall, I found there are good industries which are consolidating. So market is basically showing a consolidation move. Few are aggressive and few which have gone down over the time. Let's say products, for example, are picking up right now. Let's say IRCTC, which was down, and let's say Bharat Just Dial, which was down yearly 6 months mein, and now it is correcting back. So usually corrections in this charts should look something like this. For example, agrochemical, right? There has been correction. Now there is a small growth in 3 months. So that is how the pattern should look. In PI industries, if you're seeing Aarti Industries, this one had not Aarti Industries. If you see this Indus India, they were consolidating and then they are growing at 6% after the 5% down mode. They had in last 3 months they have moved 6% above that. So this kind of move is actually encouraging. Last 1 month 18%. So this has consolidated. Let's see the charts of this industry now. So if you're seeing the chart of this one, okay, I copied a wrong one. So it's insecticide. The company name is what the product they make. So ultimately it was down, and now there is a healthy correction here which is happening, and then it has to move. So this was a yearly correction which has happened, and this is if you're seeing this stock is basically sectoral, and see the healthy corrections. This is normally a good correction which can happen, and it has to slowly move after this. Not every stock has to behave the same way, but I'm saying that this kind of correction of 3 months correction which is minus, and then 1 month it's picking up. This is giving a, see, Godrej, this one is, it has corrected enough and now it has to move. That is what this is signaling. If you see insecticide, this is what it is indicating. If you're seeing Reliance India, that is what it is indicating, that has corrected enough. UPL, even that is giving a clear idea that it is improving after such a good correction. So this is how it has to look. There has to be some red in 6 months, 3 months, or at least 1 month. We have to have a clear correction and then it has to move. So if you see UPL, if you're seeing UPL, then you can understand how the correction has happened. So overall the correction happened and then it started moving. Overall in past, this is weekly chart. If you're seeing the weekly chart, for past 6 months it has corrected and now it has started moving. If we can bet on UPL somewhere here, selling a put option, and then be safe. If it's coming to this price, you can purchase one lot, but no one usually purchases one lot in a retail. So I'm just saying, like, even I won't purchase if, let's say, if I don't even know whether UPL is in this one, but it is, if you're seeing even options would be priced somewhere like that. UPL, yeah, it is there in this one. So see this. So there are so many people who are already aggressive on puts. If you're seeing here, there are aggressive on puts because, and even calls of course, but if you see, there will be even futures which can go with like this. If you're seeing selling this, so they are predicting that it would be somewhere in between, and this is a, but again, a disclaimer, I am not a SEBI registered trader, so be careful of people like me who just give advice. Like if I say trade on, we can easily trade this, I can easily trade, not you. Again, I won't give you any advice, even I can't trade it easily. So if you're seeing my losses on top of this, I have, even though I thought I could easily make money, this is how I make losses. So never go by what I take, okay? It's just my views which I'm making this video. I'm telling that always because you have to have a clear idea on what my thought process is. Okay, this so far everything is looking well, but now we have categorized few industries, right? So let's read reports on that and what industries are we have picked 2 industries in particular. That is, one is pharma and second one is packaging and containing, and third one is miscellaneous consumption, ABL food, not that one right now, but logistics is one thing which we picked. First is agrochemical and PI industries. Let's read reports on that. PI industries, where you can find reports is easily in TradingView. You can find reports, but no one might have watched it till here, so it's great that only I get to watch these videos. PI industries, I'm reading reports now. So basically most of them are suggesting a buy. So if I am seeing since August there was a buy, but after August there was a huge fall, and then newly I am observing in November there was a suggestion from ICICI and Chola Wealth. Chola Wealth really writes a great articles on these. Okay, let me log in. Chola Wealth. Okay, this might be in white color, but it has created a negative version. That is cool. Let's read. Strong quarter, continues to outperform, growth is good. Overall, the article is saying the revenue is okay. Now let's go back to what we have seen the image. Okay, the revenue has been the growth has been 26.3. The corrections were happening at good levels and it has settled here. Now they are saying that they will get a revenue of 17 point year on year. That is fine. until let's say like okay, let's see. Okay, strong exports and year-on-year growth. EBITDA grew and okay, 4 point after pact. And so basically, if this is performing, basically they're saying the growth is good and export grew by 24% year-on-year. This is a core business which they are into, and revenue is estimate they are thinking that it will really grow well. That is the basic validation. But how did they give the valuation? Valuation demand remains encouraging in both domestic strong Rabi season outlook. So Rabi season is what they are expecting, and the growth will be good in the companies, and it will give 70% revenue growth, and the margin will be 23%. Commissioning and additional capacity and contributing in new launches brands would fuel the growth momentum. So this is the point, newly launched brands. We have to know more about that. Moreover, the fund is raised and deployed acquisitions of pharma assets and drive inorganic growth over a medium long term. Apart from diversifying its business, enhancing the technology's capability, management has to reiterate the guidelines of I see here, read this one. Cautiously optimistic and expecting the demand to pick up only if the demand picks up, and the 3 new product launch and exports. So overall the stock trades at PE of 35.2, which is good PE ratio if you are valuing a good company. But what is a PB ratio? Even I have to see that, because ultimately I think this business runs on mostly credits, and so yeah, so mostly we have to check the books of them rather than PE ratios. I would prefer that. Slow down in the demand risks. This is the main risk, which is they are predicting if the adverse climate. This is the main things which sharp technology and economics and political shifts. So these are all the things. So political shifts is clear that there will be a economic policy, a financial policy announcement. So you have to be careful not to pick up these stocks now because of this political shift, economic and sharp technologies which can be sold, and also excess unsold inventory which they might have in their godowns and not move it, and adverse climate. All these are possibilities, and usually if you are buying for a good range like this, you can basically, this is not what I would pick, but ultimately this company has been doing really well since a long time, so that is giving my other perspective on to buy or not. Then the next one is the Icic report, which is looking clear. Strong order books. So this is what I wanted. Order books are good. The momentums here, they are not. Are they mentioning about order books? No. See this. Here they are mentioning about order books here. Because R&D, and then if you're seeing, okay, where is this one? CAGR, the stock appreciated of CAGR in last 3 years. So where is it? Yeah. We retain buy on better growth outlook on CMS. Kia Industries at, okay, they are valuing this at 50 P ratios, not on PB ratios. Trigger, okay. What they are also suggesting, apart from PI Industries, in our chemical coverage, we also like Neogen Chemicals. Trigger for Neogen Chemical future revenue growth would increase CRAM opportunities. Okay, so if Neogen increases, we have to target even CRAM. So this reports gives you an idea that if even PI industry is improving, it can give a CRAMS opportunity. Even if Neogen is improving, it can give a CRAMS opportunity. But CRAMS are really, what do they give? You need the Jory like product to understand that. So let's see again agrochemical here. Let's go to agrochemical. They are suggesting Neo, right? Here there is no Neo, but let's search here. Neogen. Is it Neogen? Neogen Chemicals is, they are saying it's good. Benchmarking against inorganic chemicals, rest of the world. Okay, they are taking a space there, but the P ratio, wow, P ratios are so high. But I don't usually check P ratios. I would check PB and other financial ratios. P ratios are always doesn't give me a true picture of the company, because P ratios and the growth rate, so PB ratios are extremely high, so the stock is not undervalued, so it is completely overvalued. But the what happens with this is we have to check if this is the main thing, we have to check PEG ratios. That is, if P ratios are high, how the growth is impacting, and if the growth is faster than P ratios, then basically it's like arbitraging, if you understand. Like if you take interest, and if you are able to earn better than the industry, so you can basically live on top of that. So even this is something like that. If the growth is better than the P ratios, then it makes sense to invest here. But I don't have a clear understanding on Neogen, so let's look into Neogen also, because they have suggested ultimately. So we have to so since they are suggesting Neogen, we have to look at Neogen. So this is how my brain works, and this is how I am processing through things. So that's where I'm. So only ICICI Security Limited, sorry, not bank. ICICI Security Limited has kept targets and kept on reaching that since a long time. Edelweiss and HDFC also has met these targets. Even the growth rate, if you're seeing, this has been huge up moves, and not every time it is sure that it will reach this thing. Even if you are seeing now, they have kept it at 700. They have targeted Neogen at this position, but now it has reached a good one. So let's see Neogen charts. Neogen Chemicals, if you're seeing, the growth is in a straight line. Since this is a weekly chart, again this is daily minute wise time frame. The chart suggests that it in a daily time frame it is volatile. Again, we have a good buying opportunity in a lesser P ratios, but this is where I am saying the correction has to come. These stocks will come in a good price if there is a bearish correction, and if let's see FIA holdings and other holdings in this one, shareholdings. So if you're seeing overall shareholdings, FIAs hold around 4%. If they sell, or they won't be selling in a good stock if it is having good move, but as it is priced at a premium price, so if you're seeing, they have started acquiring and they have started disposing here. This is what it shows, right? They have acquired at a great prices at 0.1, that has increased since June of 2020. Then they started disposing last year, and now they are again doing that. So this will always happen, so keep an eye on this position whenever you're buying, whether FIs are selling or DIs also are selling. Who is buying now? The public. Who is buying then? The public. So where is that increasing? The public. DIA has bought here, again the public is buying from the DIA. So this is what has been happening. So in September it has grown. If you're seeing September, it has grown, and then they started selling in September DIs, and now again DIs are buying, again they are selling back here. So this is what happens. You are not buying at a low price. That is what it indicates clearly, that people are not buying at a low price. This is giving a pattern. Let's see the same with PI Industries. How since first. Let's go here and see. The valuations are not so great attractive, but let's go to shareholding and what was the pattern of shareholding. So if you're seeing, FIIs are also selling PI here, and who is buying? DIIs are buying, and who is also giving up is public is also selling because of fear, which is here in the downside, and DIIs are taking it at attractive prices and they might hedge it, but ultimately who has been where FIIs took. If you're seeing, FIIs have kept on accumulating till here from 13 levels to since 2019 till here, and now they are selling it and disposing this thing. And if you have seen here, even retails were good enough here, and even they kept on selling it and then bought it and kept on selling on the highs. This is a good pattern. But if you're seeing last 2000 से क्या हो रहा है? Where is PI? So if you see last September say, this is going down, and who is going off? Okay, who is buying now? From whom are these guys buying? These guys are selling out of fear. These guys have kept on accumulating, and now they are disposing since September 2001, right? Yeah, since September 2001 till now. This is weekly chart. Okay. December 2001 tak. What has happened? These people have disposed like 1%, but still holding. Even retails have sold. Only DIIs have accumulated. So some information which DIIs know much better in terms of this industry than others. Something that retailers and public think that they know much better than others, and also this one, FIIs. So any of this can be a fear selling. So I am not pointing out that only retails have fear. Even DIIs will fear, even FIIs will fear if their investments is going wrong. So overall way, it looks something like this. The shareholding, if you see mutual funds, mostly there might be arbitrage funds which I am seeing from a long time. And if let's see monthly change in shares. Okay, hybrid fund growth, they are increasing their shares by 5%. When did this happen? And in December they have grown. In November they have reduced. So they are growing and reducing. So now they have. So if you are seeing, if you were tracking PIA, you have to also add these people in line, so you know who is adding and who is disposing the shares. In overall trend. So if you see this overall market, if you have invested 1000 in them, how did it grow? It performed better than Nifty from 2014. If you are seeing, it has performed better than Nifty, but overall trend it was like Nifty only. And if you're seeing what all they hold a lot of stocks, so I don't want to go into depth as value as on monthly changes. I'll go all 100 rows and then check this. New investments, what they are doing is Metro Brands, which you can see. What they have sold is ITC. This is how this works. I mean, this is always about mutual funds and how they are performing. So if you want to see some other aggressive allotments, PC, what is the, I don't think PPFAS is here. Equity. I don't think all are here. Select all. Okay. Not most of them are not here. Let's see all the 5-star, whichever are 5-star. So blue chip funds. This is for blue chip funds. Where are they increasing and where are they decreasing? As here. So if you go to 100 here, And this month, if you see the entire shares, what they have sold is Shree Cements. They have sold in Ambuja Cements. They have sold in Ultratech. Overall, their performance was a lot better than the fund was performing better than BSC 100. So this is how you can basically check if you are in the right direction with a mutual fund or not, because mutual funds have usually take a better decision than you and me. So this is why you can check this decision. So let's see if some mutual funds have invested in Lupin, because I did. So I'm just checking and I'm curious whether they have done that. Okay, I'm going not to mutual fund markets. Lupin, okay. And deals, not deals, corporate actions, naming shareholders, monthly holdings. Yes. Okay, now going to all these people and now seeing monthly. November month, nahi, yeah, month. Yes, there were people who were aggressively selling it, but if you're seeing another trend here, Aditya, Frontline Equity Fund, how much they have increased their shares was huge amount of shares here. If you're seeing, and their growth also compared to Nifty, this was ranked in top 23 in category, but overall performance was 4. So the trend is not given, but if you want to know more about this, you can also see why were they go so much aggressive on a single stock, that too also increase a huge amount over this one. When did they buy shareholders this level and almost 21,000? How does this capital work? So if you are seeing Frontline, mutual fund, this is what we have to see. The objective of the scheme is long-term growth of a capital through portfolio with target of 100% in equity by aiming and being diversified across various industries and sectors at chosen benchmark Nifty, and secondary objective is to as the income generated and dividends in a long-term capital growth. Investment in equity and equity-related security diversified across industries. So this is what they are trying to tell. So if I'm seeing the PDF here,
it is easy to swim with the tide, but it's very difficult to go against it. Similarly, in case of equity investing, when the markets are doing great, it's relatively easy to perform. But when the markets are volatile and are going through a rough patch, not every scheme will do well. Thus, it is important to invest in a scheme that has managed to perform well in good times and has weathered the tough times to deliver consistent returns. Aditya Birla Sun Life Frontline Equity Fund is one such scheme, which aims to outperform the benchmark across market cycles. Thus, it is also one of the largest schemes in this category. The scheme's success could be attributed to 3 pillars of its investment philosophy. Research-driven investing that deploys a blend of top-down and bottom-up approach. Discipline to maintain sector exposure within a defined range of sectoral weight in the benchmark. Focus on the large-cap companies that have proved their mettle over the years. What's more, the scheme maintains an average 80% or higher allocation in large-cap stocks, lending far better stability to the portfolio. As per the current market capitalization, some of the large-cap companies include names like HDFC Bank, Infosys, L&T, and Maruti Suzuki, etc. The scheme avoids excessive concentration towards sectors and stocks that helps in managing portfolio diversification. The fund manager has flexibility to look for investment opportunities based on his conviction, even outside large cap space. So, whether you are commencing your equity investment journey or you're already a seasoned investor aiming to generate wealth, Aditya Birla Sun Life Frontline Equity Fund, with its research, discipline, and focus, can be considered as an investment choice. 70 buys it today.
Okay, so it seems that they are based out of growth more than their even the risk is huge. So this is what even we have followed here. But what I want to know is why they have taken such a good allotment here. And even if you're seeing Sundaram, this is basically Nifty ETF fund. So this is not the decision which they take. But if we are reading this, we have to read an article which Aditya Birla has, the firm has written over here in Lupin. So it has to be something with. I don't know how to find this. If they have invested here, let's not go towards this now, and let's see. They have increased this in November. Who has bought lot of shares is ICICI, and in October again ICICI Retirement Fund, Pure Equity Growth. Okay, there were funds which have increased allotment here, but I would practically focus on someone who is good here. Like Aditya Birla is risky one, so let's see what is a weightage which they have and which one do they have total holdings on. So ICICI total holdings is 8%. HDFC, I'll see all the. So how much percentage they allot for this one? Lupin, they have allotted around 0.3%, which is good risk in terms of if the reward is great, this risk of 0.3 is fine. But a small investor, this usually diversifying so much. So if you're seeing, they have diversified a lot in almost many companies, 50 companies, or more than 50 companies. So greater than Nifty. So for a small investor, this might not be a good thing. But if you are looking for a mutual fund, I guess this one looks good. I mean, they are riding the wave. Let's see what holdings they have sold recently and how did they go. So if you see Coal India, they have recently changed their share values and they have sold some. So the point what I'm finding here is, when should they sell is when the stock is raising, not when the stock is falling, right? When did they start holding this one, and when did they start? See, if you are seeing this entire history, they started holding this at values. If you are seeing great values at value is around 200 crores, and it was on June 2019. Since 2019 they held a lot, and they were holding since, let's say, 2020. They started holding it till 2020. Okay, and then they started selling after that. 20 February say they started selling. So I'm seeing weekly chart, and mostly there were few dividends which were given here. 2020 tak they were holding, then sold. So this might be a bad portfolio which they might be having. So this is one thing. ONGC is the other one, but they are selling huge quantities. In Zomato they held this. So if you're seeing Zomato, this was a huge risk which they have taken, and in July, let's say So and they bought this in July, right? August. July, which date? 30. Okay. They bought it exactly on July 30th. Let's take a VWAP price, July 30th. They have bought this share, and from 30th it went up. And when did they sell this share? 31st. I'll draw marker. So it's just to understand, what are they doing great at this job, or do they suck at this job which they are doing. So this is daily chart. So July 30th is somewhere here. Let's say they bought it at low values and they were the one. So if you're seeing the players who have taken it up, if they bought it on July 30th, and then this is the period, so I'll keep it here. So they bought it at this zone at July 31st. If you're seeing, a 4 hour chart, then when did they start selling this? And if they bought it here, they started selling in September of 2019. Equal quantity नहीं, बहुत ज़्यादा 20. They have sold like 22% there, and 31st of December. They sold one in September 30th May they sold, right? September, when is September? October, September 30th. So see, they bought and sold at the same price. Nothing, no difference is there here, which is bringing value. You're seeing July 30th, right? Again 30th is somewhere here. The price was here. So average में ही they have sold it again. So this I don't know what was the VWAP and which quantities they bought here. So again I will go to 4 hours. This was 4 hours chart which I'm seeing. Again 30th में there are different prices, 2/30th prices. So let's think they have bought it here when it was at a low, and they sold it on 30th the other month, which was good. Basically 30th बोले तो they won't be selling in 30th, they might be selling before 30th. So I would say even here or somewhere there overall. So I can't take monthly ranges, so it is difficult, but they are selling in September and November they have sold. So November ka average we have to take and keep something in November. Then November kahan par hai? November is going down and November has gone up here till here. So they might have sold at this zone again. They've exited with some profits, good profits. So this is the good decision which they are making. So they are exiting in somewhat a good up move. Once there is a up move, and sometimes they are exiting with some losses. So overall they are managing their fund in a good way. Mahindra and Mahindra, if you are seeing, total holdings are 1%, but we can't see like monthly mein new, whatever is new. Let's see that Aditya Birla Fashion Holdings, which is new. If you're seeing timeline, they started holding in December. Is Aditya Birla doing better in December? ABFRL, this same people, same organization, so insider information might be. But in the month of December, if I'm seeing weekly chart, it was performing really well in December. They have got their entire thing back. If you're seeing, if they sell it now, it is almost clear that they are going to make huge amount of. So they bought it in December, these months, and they still didn't exit. This is a new entry which they have taken. Again, Lupin was a new entry. If you're seeing, there is huge change here. They are also investing in Whirlpool. They are also seeing IndusInd Bank. So I can just take one fund like this and then look forward for what allotments they are making in each fund, and then make a decision on that. Like again, how I have shown you is I've gone to whatever fund which I had to take. Let's say if I'm taking HDFC Bank, I want to take HDFC Bank, so I'll go to HDFC Bank and see for the mutual funds holdings and see non-arbitrage funds, not all these things. What I would do is basically go here and see this is arbitrage fund, this is arbitrage fund, not good. So whenever you're seeing arbitrage fund, keep away from them. These are not good. ITI holding, large investment here, ITI. If you see ITI ka so monthly, again, if we are seeing this, their new investments were in Siemens, one, Hindustan Petroleum Corporation. They have reduced their shares in Johnson Hitachi Air, and they are increasing in ABB. And let's see more, 100 rows if they have. So they are also selling in Equitas, Godrej, and other things. So let's see this one, DLF. If someone is selling since last month or not, I don't really know. So I'm really interested in DLF. Okay, close this off. Again, go to markets. Again, go to DLF. Reports are really not so great. 12% and 16%. This might be for 2 years. And now if you are seeing F&O nahi bhai, shareholding, mutual funds holding. So I want to see arbitrage, not arbitrage funds. That's the only thing. I want to see equivate fund. This is not good. If you are seeing cycle regular growth funds, then 100% of shares has been allocated last month. How what all funds, arbitrage. Okay, balance fund nahi, advance balance fund nahi, arbitrage fund nahi, access flexi cap growth fund. They've added here, taken off again the positions in December month. Okay, business cycle, arbitrage fund, balanced advantage fund nahi. Here, sector leaders fund, they have added their positions, but they have removed their positions again. But let's check this one, sector leader ETFs. They have removed this position, so I have to see कि क्या हो रहा है यहाँ पर. Overall they have removed, so they are adding. Even if you are seeing here, these guys are adding in PI Industries because they are sector leaders. So you will know sector leaders just by seeing this list, who are the sector leaders in each industry. But overall, if you are seeing, they are selling more than this is the when you say DIS are selling, this is the DIS which you are seeing them selling. And now I'll filter by DLF. If you are seeing, the holdings were good and everything got sold. If you are seeing, the quantity which they bought was 18 every month. They have been purchasing 18. In this month they have sold 18. The next month also they might be selling 18. So since the selling has started, we might not be bullish on DLF anymore, and I can basically exit because these guys know better than me. One guy has taken a good decision, and let's see who is running this one. how much do they have in their fund, and if you're seeing they have not performed extremely well, so I might not take a decision based on these guys. But ultimately these guys might have known some information which I don't know, so I am sticking with these guys right now. Until I make a clear decision, I would stick with these guys. Phew. So overall, this is sending us the basic information on how to, basically analyze on mutual fund decisions. What if you were picking a stock, how mutual funds do it, and I guess everyone knows BFRL and other things, like technical aspects of it. If you're seeing the growth here, you just draw a trend line and draw support. If you practice it aggressively, you will understand this by yourself. You don't need anyone's support, and you'll find a lot of videos and tutorials, so I don't have to explain. But what most of the peoples don't explain is these things, which a good product like TradingView or Tijori give you a edge on top of all these things. And one more thing, let's focus is on this is what we are doing right now. Again, let's go to DLF and see who have aggressively sold. So we want to know who have sold that, so we can make a better decision out of it. Because if I'm seeing DLF, everyone is buying an arbitrage fund, but usually arbitrage funds really suck because they don't give you, they hide most of the information. So if you're seeing mutual fund holdings, everything will be arbitrage. If you're seeing this huge thing here, equivate, we have to know who are selling it, because they might not be arbitrage fund, they might be some advantage fund, balanced Invesco arbitrage. So I have to stock shareholdings. Yes. DIs have been buying overall. If you're seeing here, FIS are selling, and mutual funds monthly holdings. And there is also promoter non-institutional fundings. I don't really think about that. These guys are arbitrage fund. I have to have a filter where I remove the word arbitrage. This flexi cap fund has increased. Okay, let's see this one who has increased a lot. Arbitrage. Okay, let's see the other way around, who has sold a lot. Okay, equivate. Structure, Tata Infrastructure Fund growth, sold it. Infrastructure growth has sold it. Okay, these are good informations to have, but they don't have, don't they have any holdings here? So what I do is I'll check with this. So here, if you're seeing BSE was performing better than them, so not going to take this decision anytime. Even if I'm seeing this, BSE has performed better than them, so not taking this decision. Kotak Next 50, this is also takes like an ETF, so we don't have to take this. ETF, Invesco, arbitrage, everything is arbitrage here, so need to have a filter for arbitrage funds. Okay, here 100% sold in balanced advantage. Okay, this is this has been performing worse than this, so let's not take that decision. Plenty opportunity fund, regular growth. Okay, -%. This has had a steady growth over whatever it was, because arbitrage. Okay, again arbitrage will have a steady growth no matter what, so that's the reason arbitrage funds are really good. But it works only on F&O and other things, so it's not so great in terms of risk. in terms of growth. You will get a steady growth. But what is a great thing about arbitrage funds, let me tell you, is you'll have the stable capital. One, you'll keep selling futures against it, and that is like whenever it is going down, you'll be making you'll be making monthly money, and even if it's going down, you won't be making any kind of losses. If it is going up, you'll be making losses in the futures. You'll square off with the cash, or you'll give cash delivery there, but ultimately since even your cash is growing up and the futures are going, so ultimately you'll be making money in the futures. So that way it is always good. But what is the advantage of that? So you're basically pledging your stocks. So that way you're pledging your stocks and you're getting what out of that. What do you get? You get interest rate. Let me tell in terms of ABFRL what's happening with arbitrage funds. If you see sensible right now, options, ABFRL is here. What I can do is I will basically add selling this futures, right? What is the ABFRL ka stock? It is at 12 rupees. So this 2 rupees difference is what I make. So let me clear this off and buy this. I'm selling the next month and buying this. Okay, reverse way. Let's do this in a reverse way. So if I give it 3%, something like this will be the difference. So the price difference is 2 rupees between the arbitrage and this one. So this is the difference you will make every month. How much capital do you need to have? You literally don't need any kind of money with this, because you are basically making every month with your stocks. Let me just sell this. So you are buying a stock, so you'll be needing this capital, which is basically, if you are having the same amount of lots, you are getting it at a good price, right? So it is actually good in terms of that. But I don't like arbitrage funds, because even though they are giving liquidity to the market, this is what happens. You can't read through the stuff. Okay, now let's go to Tata large cap funds growth. They didn't sell anywhere here. They didn't, neither this guy is ETF, dynamic, regular fund, advantage fund, Sundaram. They have sold, but this is small quantity. These guys, no. Okay, these guys did really well in between, but Nifty has competed them in near terms. Overall, even when the market was down, they were performing good. So let's go to what they were selling. They were selling DLF. They didn't sell DLF, but DLF. So they didn't have DLF first place. Here it showed they had DLF. Okay, the quantity is minus. Okay, and they didn't. Okay, they are shorting DLF on top of this. Cool. That's good. So someone is shorting DLF, and here also there is a shorting of DLF. So always good. Great. Overall, when I'm seeing this, okay, now I found few industries, and now let's go back and see how PI Industries is doing. PI Industries right now is in a good support region. In weekly time frame, it has to come to 2600 at a good. This would be a good price for entry. Again, that's why I've kept an alert here. And there's one more alert, because it has crossed this. If it is coming here, it is a great thing to happen and buy a good amount of stocks here. But if it doesn't come, even because it's the bearish market, I guess it can hit this levels within 1 or 2 weeks. So this is a good stock, and let's see again in terms of this one. Clearly it is overvalued, so let's not check there. PI Industries, I know the fundamentals, so I'm not going in depth in fundamentals. I'm just seeing. We have already seen the reports here again. We'll go through the reports. The report was saying that to be bullish, we saw this Chola Wealth as well as this, because these were saying, Chola Wealth was saying basically it is not, the cons were the climate changes and economic changes and political changes might affect it. And this was basically saying that the PB ratios, the bookings and orders are really good. The order book is clearly good. So that way they are bullish. If you see Motilal, they are saying the annual report highlights intention of building growth engines next level in global arena, participation of life sciences. Yeah, so they are also coming into other industries. That is one good thing which might give good valuation. So overall the trend is down, which gives it a good valuation, and as people say, buy dips. This can be a proper dip for PI industry, so I can enter that position. Then next one is here we were seeing Container Corp. There were a lot of calls even in Container Corp, especially first, let's not, before going to Concor, even let's see reports. What reports are given as the recent reports say there is a good up move, 21%, 22%. HDFC Bank accumulation and ICICI Bank is for buy. Why are they giving a buy? Dominant in the CTO business, market share is with 60 terminals. Okay, cool. 60 terminals is great. Equity capital is market valuation is 41 crores, 41,000 crores. So good. The valuation is, let's see overview of this. The valuations are here. The valuation score is not so good. Container Corporation. So overall 12% growth since long time. It's not so good compared to 80% when CMEC, but let's see. Handling incomes, road management, rail fringe management, good domestic cool. Container logistics. So they are a dominant player in containers. They are a dominant player in rail transport, logistics. Apart from Adani, they hold a good position there. In warehouse, they are largest players. In road transportation, they are largest players. So this is good in overall business. But is it a PSU? Shareholding, promoters, FIS, insurance companies, mutual funds. Okay. Yeah, exactly. President of India, Minister of Railways. So he is the major holder. It is almost the same. This doesn't change, only the remaining change. So LIC has the largest share in this one. So overall, even the business looks fine, but PSU is not what we care for, so I'll keep an X mark here because of that. Not because of its PSU. I value PSUs, multiple PSUs, but they give a lot of dividends and they don't grow. If you're seeing Adani, I'm not against dividends again. I am against good dividends, but not giving a yield of 10%, and that is not good. But the growth rate so far is more slow compared to others. So let's see TCS Express, which is one good thing which we are seeing here, and other one is okay. There is no correction here, so let's not see that. There is a correction here. That's why I was looking into this. No correction here. No correction here. No correction here. No correction here. Only correction is here. So this is good pick for me. So Adani Transport. I have recently also seen Adani. Someone has valued it at 100%, so it might grow 100% according to the report. So can we go in futures with Adani ports? Can we go with future positions? So how I started my trading journey was with Adani when it was at 300 levels, and then it grew to 700 levels, at some time 900 levels. That is when I regretted that I started trading in the first place. Then I got introduced to options, and I like options right now. So and even futures. But now if you're seeing Adani's position, it is in a good level, and it's consolidating. It has consolidated in this zone. So whenever it crosses this zone, I wanted to take a future long in this position and be in that position. Otherwise, even if it's down here, somewhere here, I might take another future long, which I am thinking to do since a long time. But since it's a bearish market, even though, let's see how Adani has moved since that time. Yeah, it is going down. Once it's down again, it comes back to 700 levels. I'll take an entry, and then so Adani is good according to me here. And if you're seeing reports, there was an extensive report which was written on Adani. I loved that report. I even have that report, but I just want to share it here. The report is basically mentioning all the things which are there in Ventura report. Yes, Ventura. So if you're seeing the report, this is a clear, extensive report which is amazing. I've seen so far not really good report as this one. It gives you the holistic view of what Adani Ports is doing. This is a negative print of that, but ultimately this is really, really great. When I'm seeing the report, you go through this report, and only then you will understand how good Adani ports is. But right now, if you're seeing valuation of Adani, it is decent, better valued in terms of P ratio. It is better valued than Corp, and even the growth. If you're seeing, the growth has been it's fluctuating in cargo, but ultimately once the economy revives and even the manufacturing starts functioning really well, they are taking market share, that is for sure. And if you're seeing the financial and sales growth of theirs, I am liking that. So let's see, last 5 years it has gone down in terms of sales, number of sales. Great, which I didn't notice earlier, but cool. What is a PB? PB right now, it is going up, kept on going up. So okay. So if you're seeing this might not be a good valuation to buy this right now, but the same time you shouldn't be going with a huge volume. I mean, I won't be buying futures. Definitely I would take something like stocks here when it's coming down, but not in futures. Let's say not instead of 10 lakhs, I'll deploy 1 lakh or something. Cool. Adani is fine now. Saving this and going to the next one here. We have a lot of things, so I'll explore Alexo footwear. if the P ratios and PB ratios are really high, then no entry for sure. No, sincere, no. Mostly everything is like that. Even this I'll go later. But so far, this has been already a 2 hours video, which I didn't anticipate it would be a 2 hours video, but it ended up in 2 hours video. But I have shared what are my fundamentals, how I do my fundamental research, and where I read the reports. Usually, apart from this, you have to read annual reports and other things and take highlights from there. But okay, this is fine for now. Yeah, okay then, take care. I will have a leave. Before everything else, again I would like to mention that this, as a disclaimer which you have to read, the video is created just for educational purpose and how I do investment and trading, but not to go with my views any time. And please, your money is more important and your financial health is a lot more important, and even your health is important, but financial health, if you are only financial healthy, you can survive in this world. So please take decisions sharply and wisely. Their options trading is good, but have a complete knowledge of it when you're taking a trade, and you need to have a sufficient capital to take that trade. So I have seen many people in Facebook and WhatsApp, Telegram groups have lost huge capitals doing option and futures trade, because basically when you're doing on top of margin and leverage, it is really hard to manage that if there is a market crash. So please, if you can, let's say if the entire market crash and your entire capital is wiped out, just think whether you can earn it back or not, and always keep that in your mind. And apart from that, also what you have to really do is have a clear view on why you are taking a particular trade, and have a clear risk management. Most of the traders, the number one key for a trader is always risk management, and if that is not there, if that psychology is not being developed, you can take more risk, but the reward has to be much higher for the risk which you are taking. And the point here, what I'm mentioning is, if you're taking that risk, you have to have a gut and a risk appetite to do that. If you are losing your mind, if that kind of risk is occurring, and if you're losing your mind on that, then it's better to stay out of that risk as soon as possible. So your psychological health and psychological behavior affects your financial health. So always keep this in mind before you trade, and always learn from a proper guru. There are a lot of fake gurus. Even I am not a guru, for example. I am just doing my homework here, and I am saying how I trade. So don't misunderstand me as a guru. I am just a learner, and I'll keep on learning from stock market. I am not a teacher. I am not here to teach, and I am not eligible to teach also. That's why I am giving a clear disclaimer that please trade under your own risk. Don't go by whatever I am saying here, and not even the people who have written the reports. Okay, I am saying see the reports, but ultimately you are the one who have to take the decision, or your financial manager, or try to invest in mutual funds who have been performing better than the market over years, and the team remains the same. So leave it to the experts if you can't manage it. Okay then, cool guys. This was a huge lecture overall, but always be careful with your financial health and take care of your health. Thank you. Bye.